Okay, let's get right into it. Today, we are breaking down a massive, and I mean absolutely massive, opportunity that's sitting right in front of us in the 2026 software industry. Think of this explainer as your personal roadmap. We're going to cut through all the noise, really look at the SaaS ecosystem, and figure out exactly how you can position yourself to absolutely thrive.
So check out this number, $465 billion. That's what the global SaaS market is projected to hit by 2026. I mean, wow, right? That's not just some tiny niche corner of the internet anymore. This is literally the fundamental infrastructure that runs modern business. It's a vast corporate ecosystem with an almost unfathomable amount of capital flowing through it every single day. But seeing a number with that many zeros, it can feel a little abstract, maybe even a bit intimidating. It kind of feels like this giant playground that's strictly reserved for the multinational tech giants and massive institutions.
But hold on, let's contrast that massive corporate figure with this incredibly empowering reality. $5,000 to $50,000 a month in recurring revenue. Now that is exactly what a solo founder can realistically generate today. You really don't need a huge slice of that $465 billion pie. Actually, you just need to solve one specific problem. Maybe it's building a niche scheduling tool for local bakeries, something like that, to capture your own highly achievable sliver of the market.
Okay, let's dive into this. Section 1. The 2026 SaaS landscape, a macro analysis.
To understand how to actually carve out that revenue, we've got to look at where corporate spending is aggressively heading right now. So Gartner's data tells us that current company software use sits at 70% SaaS. But get this, it's rapidly accelerating to 85% by the end of 2026. Basically, companies are completely ditching those clunky, outdated on-premise servers. So why does this matter for you? Well, this huge shift heavily favors new, agile entrants over the old legacy competitors. Big corporations are actively hunting for modern, lightweight cloud solutions, and that creates a massive vacuum of opportunity for builders who can jump in and meet that immediate demand.
Moving right along, Section 2, Why SaaS Wins Today. Let's take a look at the model mechanics.
Now, what makes this specific business model absolutely dominate today's market? Two words: recurring revenue. In the old-school software model, you made a one-off sale and boom, next month you're starting right back at zero. But with SaaS, customers pay on an ongoing basis. It's kind of like a highly profitable gym membership, except you actually use it. This completely changes the math of a business. It guarantees predictable, compounding growth. When you land a new customer, their value just stacks right on top of the customers from last month. It creates this awesome revenue snowball that you just literally cannot get in traditional retail or service models.
And because of that compounding structure, a really efficient solo founder can hit full profitability in just 12 to 18 months. Think about that. You aren't constantly fighting to replace one-off sales. Plus, the overhead of delivering software is remarkably low, so your revenue catches up to and then totally blows past your operating costs super fast. The path to a sustainable, profitable business is just highly accelerated here.
All right, let's take a breath for a second. We've just talked about a $465 billion industry and some really intense corporate adoption rates. It's super easy to look at those towering metrics and think, wait, do I need millions of dollars in backing to even start playing this game? We need to dramatically shift our focus right now. Let's step away from those massive corporate ecosystems and look at the absolute reality of the individual builder today.
Now, what's really interesting about this is Section 3, Micro-SaaS versus venture scale. Let's look at these two distinct paths.
See, there isn't just one single way to build a software company. You've got venture scale SaaS on one side and then solo founder micro-SaaS on the other. That first path, it is incredibly heavy. It's burdened by external expectations, massive cash burn, and this whole complex web of investors. But the other path, it's exceptionally lightweight, highly targeted, and best of all, entirely within your control. So let's break down exactly what the data tells us about both of these distinct realities.
First up, the venture-funded reality. Frankly, it's grueling. The data shows that in 2026, investors have become highly selective. To even get a foot in the door with a venture capitalist right now, you typically need to already be generating $500,000 to $1 million in annual recurring revenue. I mean, that is a huge barrier to entry. And let's say you do get the money. Well, you're immediately under immense pressure to achieve this unsustainable scale at all costs. You're basically trading your control and your profitability for these crazy hypergrowth expectations. On the flip side, though, we have the micro-SaaS advantage, which is entirely defined by solo agility. You do not need a massive team. Instead of trying to build this giant, complex suite of tools just to please investors, you laser focus on solving one very specific problem for a specific group of people. And because of this hyper-focus and keeping things lean, the Micro-SaaS model consistently unlocks incredible gross margins of 90% or more. To put that into perspective, for every $10 you make, you are keeping 9. The cost to service each new user is practically zero, so the vast majority of that revenue goes straight to the bottom line.
So, the reality here is crystal clear. The most achievable path in 2026 is the solo founder Micro-SaaS. And that's exactly why this explainer and the whole roadmap we're laying out for you today is focused entirely on empowering you to take this specific route. We are completely ignoring the venture capital rat race. Instead, we're focusing on this highly achievable, high-margin, solo founder path because, honestly, it's the most direct route to building a profitable, life-changing digital asset, all without needing millions in upfront capital.
Okay, so you now understand the mechanics of the 2026 landscape. You've seen the sheer scale of the market, the absolute magic of recurring revenue, and why the lean Micro-SaaS model is for sure your best entry point. But that leaves us with one ultimate question. How do you actually find and validate a wildly profitable SaaS idea before you waste time writing even a single line of code? Well, definitely keep that in mind because in part 2 of this explainer, we are going to cover exactly how to do just that.
Welcome back to the explainer. If you were here with us for part 1, you know we laid some absolutely critical groundwork for the future of software businesses. Today, well, we're pushing right forward into the exact steps you need to take to turn a fuzzy, vague concept into a concrete, money-making reality. Okay, let's dive into this. Just a super quick refresher to re-anchor our mindset. Remember our core foundation from last time. We are laser-focused on building targeted, highly specific Micro-SaaS solutions, completely sidestepping those chaotic, cash-burning venture-scale markets. Keep that tight focus in mind as we map out today's blueprint. Section 1. Validating with real customers. The myth versus reality. This brings us right to the very first major hurdle every single founder faces. Like, how do you actually know if your idea is even good? Because let me tell you, guessing in the dark is literally the fastest way to burn through your savings. There's a massive founder myth we need to bust right now. Far too many entrepreneurs think sitting in a dark room, scrolling through massive analyst reports and looking at broad industry trends counts as real market research. It absolutely does not. That's really just a highly efficient way to confirm your own biases using broad data that tells you zero about actual individual pain points. Real market research, it's messy. It means closing your laptop, getting out there, and having actual, honest conversations with real human beings who might one day pay you. So the crucial point is, these 2 steps are your absolute non-negotiable playbook before you even think about building your software. Step 1, you gotta talk to at least 10 potential customers before writing a single line of code. 10 is kind of the magic number, where you stop hearing isolated complaints and start actually seeing real patterns of recurring pain. Once you identify that pain, you move to step 2, which is building a simple landing page to test actual demand. You explain the solution you want to build, and you just see if people will actually give you their email address, or even better, a pre-order to get it. Look, if they won't even click a button on a landing page, they certainly aren't going to pay for your software. Section 2, the vertical SaaS advantage, focusing on one industry. So now we know exactly how to validate an idea, right? But what type of software is actually winning in the current market landscape? Because if you're gonna build something, you definitely want the tailwinds in your favor. Let's make sure we're crystal clear on this concept. Vertical SaaS refers to software tools that are specifically designed from the ground up for one single industry. We aren't talking about a broad, general-purpose project management tool for everyone. We're talking about a highly specialized tool built exclusively for, say, independent dental practices, or a scheduling app designed specifically for commercial roofers. It's niche, it's targeted, and it solves the exact peculiar problems of one specific group of people. And this brilliantly illustrates why that matters. Vertical SaaS is completely dominating right now. It's currently outperforming general-purpose SaaS tools by a massive 3-to-1 margin in growth rate. 3-to-1. When you build for everyone, you end up building for no one. But when you build for one specific industry, your marketing becomes way cheaper, your sales pitch becomes incredibly obvious to the buyer, and your growth accelerates 3 times faster than the folks trying to boil the ocean. Section 3. Modern SaaS pricing models. Transitioning to monetization. All right, let's shift our narrative into Act 2 of our explainer today. You've got a validated idea, you're targeting a specific vertical. Now, how do we actually make money? Selecting the right pricing model is essentially the engine of your entire business. Now, what's really interesting to look at here is the dramatic shift in how software is being sold right now. A highly significant 38% of SaaS companies have now adopted usage-based pricing. The days of just charging a flat $50 a month, regardless of whether the customer uses the app once or 1,000 times, those days are fading. Usage-based pricing acts a lot more like a utility bill. The more value the customer gets and the more they use your tool, the more they pay. It aligns your success perfectly with your customer's success. But, pure usage pricing isn't always a silver bullet. The real magic happens when you combine them. Companies that utilize a hybrid model, meaning they charge a predictable flat subscription-based fee, plus an additional usage-based fee when a customer exceeds certain limits, they are seeing a 21% higher median growth rate than companies relying on pure subscription alone. That 21% is absolutely massive. It gives you the predictable cash flow of a subscription so you can pay your bills, plus the uncapped revenue upside when your power users really start leaning heavily on your software. Section 4, the freemium AI warning. Proceed with caution. I need you to stop what you're doing for a second and focus entirely on this question. Is free actually free? We need to slow down completely here and really unpack this because it is a fatal trap that is actively destroying new businesses. In the past, founders relied heavily on a freemium model, giving away a basic version of their app for free to attract thousands of users, hoping a few would upgrade. 10 years ago, the cost of hosting a free user was essentially zero. But today, the rules have fundamentally changed, and this assumption is incredibly dangerous. Here is the harsh reality. Overly generous free tiers now risk instant bankruptcy due to hidden AI compute costs. If your software integrates any kind of artificial intelligence, which, let's be real, most modern Micro-SaaS tools do, every single time a user clicks generate, your system is making a call to an AI model behind the scenes, and every single one of those compute calls costs you real US dollars. If you open the floodgates with a generous free tier, a surge of free users can easily generate thousands of dollars in AI compute bills overnight, all while paying you absolutely nothing. You will quite literally be charged to death by your own popularity. And trust me, your cloud provider will not be sympathetic if you don't strictly limit or completely eliminate free AI features. Section 5. What comes next? The build phase. Let's move to and see how this builds. Okay, let's take a collective breath, shake off that warning, and get back to the exciting stuff. Now that we know how to properly validate an idea by talking to real humans, how to focus on high-growth vertical markets, and how to price our software without bankrupting ourselves on AI compute costs, well, it's time to actually make it real. Coming up in part 3 of this series, we're going to outline exactly how to build the product, step by step. And we'll lay out the realistic timeline it takes to go from just an idea in your head to seeing that very first US dollar actually hit your bank account. You've got the strategy. You know the pitfalls. You understand the market mechanics. The blueprint is right here in front of you. So I'm going to leave you with one final, very simple question to think about before our next explainer. Are you ready to build? I'll see you in part 3.